Hello and welcome to this July 14th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are taking a look at Intel Corporation, ticker symbol INTC. This is roughly a $117 billion technology company in the semiconductor space. It's kind of interesting. I'm not really looking at this necessarily from a trading perspective, just something that I've noticed over the last few reporting periods. Each of these black arrows that I'm showing here represents the point in time in which Intel has reported its earnings the last few quarters. And outside of the July 2009 period where we actually gapped up with earnings news and then continued moving higher, take a look at what happened in October. You can see we had gapped up and then sold off from almost $21 down to $18, so it was more than a 10% sell-off over the next 2 to 3 weeks after earnings. And then we came up, basically just got back through that October level in early January, getting up to about 21 and a quarter or so, and dipped back down within 2 to 3 weeks below $19, so another 10% or more sell-off after earnings came out back in January of 2010. And then check out what had happened in April, just a few months ago. The stock had bottomed back in February, just below $19, had run all the way up to $24, posted earnings, and then literally dropped from $24 down to just under $20 within about 2 or 3 weeks. So each of the last three major, each of the last three earnings reports that Intel has had, we've seen big gap ups and then failures right on the heels of it. Pretty big failures in each case in terms of percentage losses. So now here we are. Intel reports its earnings on Tuesday evening after the market closes. Earnings were great. The stock looks to trade higher when we open on Wednesday. But after this move to the upside from $19, we closed at 21 today. In after hours, it was trading as high. Last time I saw it was trading as high as 22.80 or thereabouts. I think the last time I saw was maybe around 22.50 or so. So it did pull back some, but nonetheless, it was having a very, very strong after hours performance. And you just have to wonder as it gaps up here and hits this trend line, where if we connect the most recent highs back in April, you can see this trend line that comes across. You wonder if we're going to see a repeat performance of what we've seen the last 3 quarters. Can Intel hold on to these gains and sustain, not only sustain those gains, but then actually build on the gains and move up through this resistance area? It's going to be very interesting to see because we haven't seen that since July of 2009. So that's going to be a big thing to focus on. Now, from a technical perspective, the action today getting back up to 2101, that close was actually just below the 50-day moving average at 2104, and it also closed just above this short-term downtrend flag, if you will, that we saw over the course of the last few months. So it looks like it's trying to break out of this range, and with the after-hours action on Tuesday, it appears definitely like we're going to at least see a very strong open on Tuesday, and then we'll see what Intel is made of from there. So again, not really looking at this necessarily as a trading opportunity, but rather let's just see whether or not Intel can continue to push higher after the gap up, the likely gap up on Wednesday, because if we can't and we start seeing Intel roll over again like we've seen the last 3 quarters, that may put some additional pressure on the market in the near term. If, however, we get that breakout, it may be just what the market needs to bring the major moving averages up above 50-day moving averages, and doing it with volume would certainly help. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.